Good evening. Ira Epstein of Linn & Associates with your evening wrap of your SPDR ETF video. And this is for Thursday, the 4th of June, 2020. All right. So we're looking at a market that's mixed. We're still seeing the weakness that's hitting in the XLK. It's one of the sectors, which is the tech sector, of course, and we're still seeing the QQQ down a little bit here. The Dow is up a fraction, but the Dow is pretty heavily weighted today by what Boeing did, as Boeing had a big rally. In fact, I've added something new in my subscriber video, not this one, but the subscriber video for my subscribers on SPDRs and ETFs that I record in the afternoon. And that one now is JETS, J-E-T-S, which covers the airlines, it covers the terminals and other areas, because as the growth is coming back into that, it's something you want to be watching. So I keep adding, as I told you, in that, and it's interesting because you see how that plays out. You tie it into the futures for the other parts of the indices, but why not look at some of these sectors? They're important. As we go to the XLK, you can see the market's giving you a bit of a pause. This is the highest high it just made yesterday. So it's pausing. That's not enough reason to be bearish in any manner. The pattern is still one overall of higher lows and a higher high. Certainly from right here, that began. At this point to that, you made the lower low, and then you came right back and reestablished the uptrend. The market is trading over the 18-day average of closes. It's had a big run since the 18-day got over the 100 right here, and the market has continued on. The upper resistance has been consistent at the upper Bollinger Band. Each time you've hit it, you've come away from it. You have not locked in on it. And locking in, if you want to see what it looks like to lock in on a Bollinger Band, run the dollar index. And you will see how it's just leaning on it. Same thing in the euro currency. It's doing the identical thing. That's the difference between this, and you have to recognize when they come about. You still have a lot of bullishness in this market as you've got the embedded reading. So the momentum, when it locks in until it's gone, it tells me on the breaks the pros are still buying the market. You'd have to get the red number under 80 for me to say you've lost the embedded reading, which would then change my whole attitude on the market while that goes on, looking for a correction back to the 18-day average. Right now, I think the market's getting its support. If you have a subscriber video to my end of the day, you'll see I use a different moving average in that as to where I think the pros will be reaching into the market. On SMH, which is pretty much the same, you're replicating 25 US semiconductor. You can see this is a breakout number. Why is it a breakout? Well, if we take a look, the market hadn't had two closes over the upper Bollinger Band. You had one yesterday and again today. So until you come back under these areas right through here, you can make noise and play in that. That market's a breakout number to the upside. Add to that the bullishness of the embedded reading, and yes, I would tell you, you don't buy over Bollinger Bands, but I'm expecting solid buying in the market on pullbacks under those bands on the first good correction. In the industrial sector, this market is bullish as well. There's so many things bullish in the stock market right now. Higher lows, higher highs, running that upper Bollinger Band, then backing away from it, coming down, and what was resistance, which was the 100-day average of closes, is likely to now prove to be the support. What's the next overall target? Could be the 200-day average. Getting up to that number and staying over it any length of time is going to be a real trick. Generally, the longer-term averages carry a lot of importance, especially when you've broken this much and now spent a lot of energy coming back to them. That doesn't mean you get bearish at that number. I'm just giving you the warning. On the energy sector, we're fighting at the 100 in green, the 100-day average in the upper Bollinger Band in an uptrend in a market that has higher lows, higher highs. And as I said, there's a good piece of news now coming out for this, because in this sector, it appears that OPEC is going to be able to, again, look past June now into July to see if they have to keep the production cuts going and so on. But they're going to agree, from everything I'm reading, to those cuts extending through the end of July. In the NASDAQ, I've been saying I think there's going to be some rotation here where the market that led everything, the FANG stocks and so on, might go into a consolidation, a pause, and other parts of the market catch up. And that seems to be what's going on. You did make a new move high yesterday, and today you're getting what's called an outside day down. It's a key reversal down. Why a key reversal? It's a key reversal because it's the highest high of this leg of the move. So from everything that began here, you've now got an outside day down. We've had them in the past too. You had one over here, just as a way of an example. You had one here. Generally, when they've come in, that's all I can use the word is generally. I can't say it's going to happen each time. You've gone back to these key average over here. So all my horns are up that might happen again. It does not mean it's the end of the stock market rally, but it's each one of those breaks back to that 18-day average seems to have come from one of these moves. That's all I look at. When I'm looking at the emerging market ETF, well, I'm bullish on this because I think that the rest of the world is going to catch up. I mean, things are going to get better, not worse in parts of the world. You've been running, this is that running the Bollinger Band. You see how you just stay on it consistently. It's like glue. You're just there. You've run into a big number. Big time number. I just said the first challenge of the 200-day average after a market had been down, it's really a hard number to get and stay over. You're there. Today you got up and now you're knocking on the door of that number. It is 63.26. You got up to 63.12 today. The upper Bollinger Band's a little under that, so you're in that zone. We'll see what the market can do with it. I wouldn't be surprised if some of the pros are taking money off the table and say, I'll let the next guy carry it and let's see what it can do. In GLD, you're just in a, a whipsaw market now. You couldn't break through the upside Bollinger Band. You came to the downside one. I don't know that you won't break through it, but so far you haven't been able to. And as I said, I expected the market to make an attempt to get back to the 18-day average of closes to figure out what to do. I don't think I was too far off on that. A shade away, about 25 cents, 30 cents. So that's what I think it's doing. I don't think it's trending right here. You had a bounce in the gold miners off the first challenge after hitting the 18-day average again of the lower band. I think the smart money took money off the table, and now they're looking at the market. They're looking because you're oversold. So do you want to sell an oversold market that's caught in this sideways action? That's the decision the marketplace has got to make. I still look for resistance at 34.78. Excuse me, 35.58 would be the number I don't want to see it get over. I have allergies, and they're hurting me right now. In TLT, you're down to the 100-day average, support zone. You could go further. What has happened is, as the market has felt better, and we're seeing that the stock market's come alive and the risk-on mentality's there, what this market has actually done is interest rates are now climbing. If you feel real good about the economy, you think interest rates are going to stay down, you need a setback to set them down. That's what you're seeing here. And FXE, as you can see, is running to the upside. So we'll see what goes on. That's what I call that run to the upside. With that, I'm Ira Epstein, choking here. I will see you all tomorrow. Take care.